Hi, Dean Jenkins with FollowMeTrades.com, and this is the weekly market update for the week coming up of September 14th, 2015. This is going to be a really interesting week. I'm going to start off by looking at the headlines like I've been doing for the last few weeks. I'm getting some good feedback from subscribers, so I'll keep doing this. So here we go. Okay, there's only really one headline that matters this week, and this is it. This is from USA Today from the 12th, and the headline is Fed rate hike decision is going down to the wire. So this is what everybody's paying attention to. Pretty much the entire world, all the financial markets of the world are watching the U.S. Federal Reserve. On Thursday the 17th, the Fed is going to announce whether they are going to raise interest rates or leave them where they're at. This is a really big deal right now. So this week's Federal Reserve meeting is shaping up to be the most dramatic in recent memory, and I think that's a true statement. Economists are divided on what the central bank's going to do, whether they will raise their rates for the first time in nearly a decade, nearly 10 years. A rate hike would mark the beginning of the end of an extraordinary era of Fed easy money since 2008. The financial crisis then, and it has kept the interest rate borrowing cost at a historically low rate and underpinned the 6-year bull market. So I've been talking about that 6-year bull market in the last several weeks leading up to the recent decline. So the Fed meets Wednesday and Thursday, and they will announce what they're going to be doing. Of 19 economists and investment strategists surveyed, 11 of them, 58%, predict the Fed will delay this move after recent turmoil in the financial markets. So for several months, all of this year, analysts have been predicting that the Fed would raise rates this September. Now the question is, with the turmoil in energy prices, with what's going on in China, with the recent declines in the U.S. stock market, what's going on in the job market, the whole big picture, analysts are now roughly 50-50 saying the Fed's not going to raise rates this upcoming week in September. Will they or won't they? What will they or won't they? I don't know. I don't think anybody can predict whether they will or not. The big deal is that there's a tremendous amount of indecision in the market about what the Fed is going to do. And in a minute, we're going to look at the charts and see how that indecision is being reflected. Let's take a look just at the calendar for a moment. So here's a website that I look at. This is from Bloomberg Business. This is just simply shows the calendar upcoming of scheduled reports and activity, different financial reports that are coming out. You can see on Tuesday, anything with a red star is a big deal. Retail sales, industrial production. On Wednesday, consumer price index. But if you look here at Thursday, what's really going on that everybody's waiting for is the FOMC, the Fed Open Market Committee meeting, the FOMC, and they're going to be announcing whether they will raise interest rates now or whether they're going to wait. And this, so 2 p.m. Eastern Time on Thursday, this is the big deal right now. So here's the chart of the Dow Jones Industrial Average. This is a daily chart, so every price bar here represents one day. If you remember from previous updates, I talked about the fact that the market was in a channel going back and forth between these upper and lower boundaries, and that had been going on since about March of this year. And I started to see a bearish pattern where we broke out of the channel, we pulled back out, broke down a little bit more, pulled up, and I had predicted several weeks in advance that this decline was going to happen, and it did. Right now, we've got something really interesting going on, and what I'm going to do is take some of these indicators off and just show you really, really clearly on the chart what's going on right now. It's pretty interesting. So I've taken the pyramids off the chart and I've expanded it a little bit so you can see the price pattern that's going on here. And I'll use my pen and I will draw something here. So the market is in what's called a pennant or a banner. You can see this triangular formation that the movement up and down of price here is getting narrower and narrower and narrower. Now to some people this would look like it's getting, the market is stabilizing after this big swing down here. Uh, but the opposite is true. The market is actually becoming unstable, and it will break out of this pattern fairly dramatically. It will not continue to compress. Maybe the first couple days of the week, don't really know what will happen. People again are waiting for Thursday for the big news from the Fed. But we could break out of this pattern before then, as people, look for signs, wherever they look for signs about what the Fed's going to do. But it will break out of this pattern, and it may break up and do something like that, or it may break down. But either way, it's going to be fairly dramatic. So will the Fed raise interest rates out of their meeting this week? I don't know. Will they decide not to raise interest rates? I don't know. If they do decide to, will the market go up or will it go down? I don't know. I don't think anybody can really accurately predict that. What we can predict is some volatility coming out of this. Now, when I keep saying I don't know, I do see a bearish pattern in the market. We've been talking about that for several weeks. We're in a bearish pattern, right down, going back up. All of our indicators, we're at the end of a 6-year bull run. The market, that bull market is mature. I see all the signs here of a bear market that is underway. I still stick to that forecast. I still see that. I think we will go on to make new lows in the market. But we may go through some volatility. Again, we may go up. I do not think we'll go up past this. If we get a little what's called a wick, if just intraday prices pop above that, that won't really change my forecast. If we close up above this line, we could be going on to make new highs. I think the high probability, everything's pointing to the fact that even if we pop up a little bit, we are still going to go put in new lows. We're going to take out this low from August 24th and go on to make new lows down into the range that I've talked about before, about 13.5 to 11.8, I think is the range for the Dow. So what do we do about this? My response to this is I am lightening up on my positions in the market. What I don't want to do is have open positions, either long or short, and have them stopped out because of volatility and lose money just because of some reaction in the market. I'm going to let the Fed announcement come out. There will be some volatility, and then a trend will be established. And based on that new trend, once the market stabilizes, that's when I will be taking new trades and trading according to the realities on the charts and the trend that is established after that initial volatility. I'll show you a quick example of just how some volatility can upset a trade. So here's a short trade that I took and that I published to my subscribers. This was on Ingersoll Rand. We took it actually on this day right here. It was awesome. We went short right here. The next day it gapped way down, and then it went on to establish this bearish pattern, and it was all going well. And then there was some news about Ingersoll Rand. Here's what I call a wick. Right? Intraday price popped above my stop was here at this red, so I got stopped out. Now I was in good profit, but I still think this is going to go on down lower. But the trade was over when some news came out on Ingersoll Rand, and intraday the price moved pretty significantly. What I don't want to do is be in a bunch of positions that are great, but have volatility around the Fed's announcement take me out of positions. The worst thing in the world is to be right about a trade and lose money on it. I just don't want to do that. So I want to be right, and when I know there's volatility coming, I'm gonna sit that out and let it settle down first. So that's my approach to the market right now. I'm gonna wait, gonna see what the Fed decision is, how the market, and I don't really care whether they raise rates or not. I care, but I'm gonna see how the market responds to that, what the reality of it is, and then I'll be placing my trades according to that. So it'll be really interesting. Stay tuned, and next week we'll be able to talk about the reality. The announcement will have been out. We'll have one trading day at least after that to take a look at it. So we'll catch up next week, and I look forward to it. Thanks.